Well, welcome everyone, and I'm absolutely delighted that so many of you could join us for our webinar today on what would Google do to reboot banking. My name is Karen Huish, and I'm the head of banking for Google in the UK, and joined today with a really great panel from all different parts of the ecosystem. So we have Derek White, our Global Head of Financial Services at Google, Florence Diss, our Head of Google Pay, Francesca Carlesi, who is the CEO and co-founder of Molo Finance, and chairing and facilitating, and I'm sure very actively participating, we have Chris Skinner. And Chris is a very well-known commentator in the industry. He's written several books on digital banking. And as many of you probably know, he has very strong and influential ideas about the future of the industry and technology. So I think we have an interesting discussion ahead of us. And with that, I'll hand over to Chris to set the scene.
Thanks, Karen, and great to see you guys. I actually go quite a long way back with Karen. I won't say how many years, but I've also done a lot of work with Derek and more and more work with Google. So it's a privilege and an honor to be invited back to join you today. And I guess what I'm going to talk about is the key things that are impacting banks and financial institutions over the next decade, of which I see 5 major changes taking place. The first is digital transformation, which I guess you all know about over the last year. The second is the inclusion and the balancing of society through technology. The third is the whole climate emergency and the impact of that on banking and finance. The fourth is the way in which we need to serve more than just our shareholders and how Milton Friedman's economic model is broken. And the fifth is the fact that if you don't deal with a more equal, inclusive society that addresses our issues such as climate change, then the internet will be the reason why you will fail over the next decade. So let's quickly go through those 5 major forces and see how they're impacting. And I'll start with the nature of digital transformation. And I've been writing and dealing with this for a long time. In fact, Derek was in my last book when he worked for BBVA, when I was talking about the lessons you could learn from banks that were trying to do digital transformation. And a lot of banks and companies generally, incumbents in all industries, not just in finance, are treating the digital transformation as a project within a function that has a budget, rather than treating it as a complete organizational business model change that has to be reinvented from the ground up. And the reason why it's important to think about the latter and not the former is that if your company was around before 1985, then the business model was built for the Industrial Revolution and physical distribution, and not for digital distribution and the connected world we're living in today within the internet. And that's a critical point, because when you think about the world we live in today, particularly thanks to cloud computing and the smartphone and the nature of open application program interfaces and apps and analytics and artificial intelligence and all the technology that is overwhelming us today in many ways, it's demanding a different business model that's built for the internet. And I typify this as when a bank moves to cloud, then many of them are becoming cloud-based, but they're not becoming cloud native. And if you just move to be cloud-based, you're evolving your industrial era business model to the internet era, rather than rethinking that business model for the internet age. And specifically, what has to happen is that the leadership team of the institution must rethink the business from the ground up, and do that with passion and implementation that understands digital transformation. And an awful lot of the leadership of the institutions I deal with don't have people who understand digital at all. They don't have people who understand technology at all. They have people who understand the industry they work in, and that's it. That's all the people in the executive leadership team, not engineers and data analysts and people who are able to build apps and APIs. So look at your leadership team and just ask yourself the question, how much of that leadership team, both the board and the executive leadership team, are digital natives, and how digitally native is your company? And just to challenge you on that final question, I wrote a blog the other day that said so many people are now talking about building colonies on Mars, and that our kids or our grandchildren might be living on Mars. Imagine if you had to build your business for customers and staff who lived on Mars. That's the business model you need to build today, because effectively when your customers and your people work from home, they might as well be on Mars. So how digital is your company in serving customers and people at home or on Mars? That's what you need to focus upon for digital transformation. The second point is the nature of the inequality of society, which has been discussed for a long time. I mean, you could go back to when humans became human to talk about inequality in society. But specifically, we had the Luddites destroying machinery. We had Metropolis, a film in the 1920s about the inequality of those who lived above ground versus underground. And that's pervasive and a continuum that is here still today. But it was exacerbated by the global financial crisis of 2008, where we saw banks bailed out by governments when they failed, and then committing a number of serious issues post that event that made them even worse, like the personal protection insurance payment scandal in Britain, which has cost billions for the UK banks, or the Australian Royal Commission that found that one of the banks was specifically charging premiums to customers who had died for advice they weren't delivering. So we need to see a change of the moral compass of banking, and that was really spotlighted in 2008 by Lord Adair Turner, the chair of the Financial Services Authority back then, who said that banks and a lot of what banking does is socially useless. And bankers didn't like that. But I think the question you have to ask yourself today, along with is your bank in a position it could serve customers on Mars, is your bank doing good for society and good for the planet? Or is your bank doing bad for society and bad for the planet? Are you socially useful or socially useless? Do you have the right moral compass? And is it focused on the right things, not just for your company, but for everyone? Which leads to the next couple of points, because when we think about the nature of our world today, there's been a huge discussion around the climate emergency and climate change and Greta Thunberg, David Attenborough, and all the things that are happening to planet Earth that might mean we won't have a planet Earth in 10, 20, 30 years. We have to change the way in which we live. And the key organizations that can do that are banks, because banks are often the institutions that fund the fossil fuel firms that are causing climate destruction. A stunning figure I came across recently is that between 1988 and 2016, 71% of the greenhouse gas emissions that are destroying Earth are coming from just 100 companies. And they're the fossil fuel companies that we all know, the oil and gas companies and similar. How can we change that behavior? We can change it by the way in which they're financed, because these companies are getting trillions of dollars of financing from the banking industry and the financial industry. There's another report I just came across that was saying, I think it's something like $23 trillion of funding has gone into the fossil fuel firms for the last 6 years from just 60 banks. If banks can change, the companies will change to renewable energy. And I know that's not an overnight switch. I live in Poland, which is run on coal. You can't just turn off Poland. You can't just turn off coal. But what you have to do is focus the change of thinking through the way in which these companies are financed to become renewable and to be net zero emissions by 2030. Otherwise, our kids won't be living on planet Earth. They'll have to go and live on Mars, literally. Which brings to the fourth point, which is also related, and it's actually doing good for society and good for the planet, which is something that resonates with me because it's the project I'm working on right now, talking to a lot of banks and financial institutions about what's their purpose. Are they doing good for society and good for the planet? Are they socially useful or socially useless? Where is their moral compass? And I can illustrate this in many ways, but I guess the height of how this really came to my mind as my current project was in 2019 when Jamie Dimon, who chairs the Business Roundtable in America, had almost 200 key industry leaders across US corporations sign a manifesto for stakeholder capitalism, which recognizes that Milton Friedman's shareholder capitalism agenda is broken and needs to be replaced. And the replacement is stakeholder capitalism. When you deal with stakeholder capitalism, you recognize you have to be socially useful because you have to serve society, the community, customers, employees, and investors, not just the investors. We need to move to stakeholder capitalism where we respect the rights of all of our community and our people and our planet, not just our profit and our bonus and our shareholder. That to me is a massive pressure on companies today, coming from the I generation, the Z and the Gen Z and the millennials. And it ends with the fifth key pressure, which is the digital transparency that we have today, thanks to the internet. You know, so much pressure is on companies today to behave responsibly because if they behave irresponsibly, they will be found out. It will go viral. It will be shared. And in fact, most of the companies that I think will fail over the next decade are those that are behaving badly for customers, employees, and the planet and society, and that their misdeeds will be found out and shared on the internet and through connectivity of everyone on Earth. And they won't fail as in disappear. They will be acquired by the companies that are doing better, that are socially useful. And that's what a lot of the fintech visionaries and startup community focus upon. And that's where we're going, I believe, over the next decade. So in summary, the urgent need to be transformed to be digital, as though you were serving customers on Mars, is a key imperative that we all learned during the pandemic and needs to continue. And you need to be cloud native, not just cloud-based. Recognizing at the same time there are these other pressures to change, such as more inclusion and diversity and equality across the business community and across society, which is enabled by technology. You can be far more inclusive and diverse and equal through technology. To recognize that the climate issues that we deal with are important, and we need to recognize the climate emergency has to change the way in which we fund businesses, whether they be fossil fuel firms or any firm, to be carbon renewable with zero emissions, including within our own organizations. To recognize that stakeholders, all of them matter, not just the shareholders, and that if we don't behave responsibly and with a social and environmental and sustainable model of business, then we will be found out because everything is actually transparent on the network. And you will be found out and held accountable for any misbehavior that you make. So I'll summarize all of that in what Google is known for, which is that statement of don't be evil, be good for society and good for the planet. And on that note, I'll go back to Karen. And Karen, I wanted to ask you, based on everything I've just covered, how would you see Google as a company rebooting banking?
Yeah, no, thanks, Chris. And yeah, I think in terms of that question, there are really several layers to the answer, very relevant to the themes that you discuss. And I think especially important in terms of the social responsibility. So whatever we do, the social responsibility and crucial aspects of making a difference to people's lives. And that certainly really resonates. And I think in terms of rebooting banking, I think it's important to frame this based on Google as a big tech company and the banking industry having very different central forces. So with banking, the central force typically is and has to be risk and managing risk. And with Google, it's all about innovation, a no barriers approach to solving problems. We have something called 10x thinking, and then really sort of tracking back to what's achievable. And I think, with your themes in mind, if we consider how Google would therefore reboot banking, it's about bringing together the best of those forces and getting the balance right on risk and the need to constantly innovate faster, usually with the additional pressure of taking out cost. And I think on that basis, the two areas that I think will have the most impact and really form the nucleus of the reboot would be culture and data. And I think if we look at data first, it could be argued that banking and financial services really have the most to gain by understanding, merging and supplementing the unique data assets that they already possess. Banks typically, and as you know, Chris, they just have not been great at doing this. And I think especially when targeting and attracting new profitable customers. And banks could no longer rely on customers choosing a bank based on where their local branch is. Those days have just gone. And that's not to say convenience isn't important, but it's very much also about relevance and consumption at the point of need. And so I think Google's hypothesis is that banks need to reinvent themselves as data companies with a banking license. And I'm saying that based on Google being a data and AI company. Our mission statement is to manage the world's data and make it easily accessible for everyone. And we have 22 years of constantly connecting, I think it's 22 years, constantly connecting and combining data sets and using AI to deliver instant insights and information. And it's that's underpinning the highly personalised and contextualised user journeys that everyone is very familiar with in Google. And I think to reboot that banking, what we need to do is put the same lens on customer journeys that in many instances may transcend banking, so that we can completely rethink the way that products and services are delivered. And to give you one example of that, Google's been doing a lot of work on concepts like the 1 hour mortgage, using a common AI and machine learning platform to completely eliminate the need to fill in forms and take friction out of the process. And I know, Derek, this is something in your global role that is very close to your heart, and it'd be good if you could add a bit of context on what we're doing in that area.
Yeah, and I see my good friend Francesca here, who's quickly become a mortgage expert with her emerging unicorn that she's leading in the mortgage space. So look forward to hearing from her. But yes, just to build on what Karen said, within Google Financial Services, we refer to the 4 C's of data. As a data company, an AI company that really is built on connecting customer data to points of interaction. There's a 4 C's of data, and that is financial services companies are brilliant at capturing data over and over and over and over again. And think about how many times do you visit an application form and it's not pre-popped. There's not pre-populated with the information that's already been provided. The second is cleaning data. Refinitiv, one of the great market data companies, has said that their business is data, has said that they spend $8 cleaning data for every $1 of capturing data. The third C is around caching data or data lakes. Every financial institution is on a journey of its data lakes. That's to show customers and regulators that data is safe and secure and parked somewhere in a data lake. The challenge is that many times no one's allowed in the lake, or nothing ever comes out of that lake. And that's where we come to the 4th C, and where the magic really happens. An external third party did some analysis that identified that the average financial institution actually uses less than 1%, actually 50 basis points of their data, their first party data, their first party structured data that they actually have in-house. And so that's where we're helping and where we see massive opportunity in the future that Chris described so eloquently around the future of financial services, is the actual calling of data. Calling the data back to the point of interaction where the human is, whether it's the employee or a customer. And so we're working with financial institutions, especially in a couple of select markets, to redesign the mortgage experience, connecting humans, the interface of the interaction, the data that exists, to determine how many humans need to be in the loop of a mortgage experience. And how can we make it digitally available? And why can't the speed of a mortgage operate at the speed of the internet?
And there's so many fantastic things that we can do to take friction out. I was in a demonstration a couple of weeks ago where we're looking at how we can automate not only the form filling, but the valuation of the property, and using aggregate Google Maps data, geospatial data from Google Earth, so that banks can very quickly check locations. Is the house near a station, a desirable score? What's the state of the roof? This is really cool stuff. And for the customer, we deliver all of that back within a very collaborative 24/7 virtual branch environment, which, you know, at the right time, if necessary, with all the tech, you can be augmented with the warmth and human of a human when needed via video. So I think there's some very exciting innovation and thinking going on in this area. So yeah, thank you, Derek, for that. And just going back to the original question on rebooting banking, I talked about data, and then the second area, which I think is really important, is and where we can help, is culture, and how to really enable a culture that promotes this rapid innovation and change. And this is more than, you think about Google, this is more than just transferring our engineering DNA. This is about rebooting, perhaps sort of drawing on other areas of the Google operating model that may be relevant. So, you know, our decision making, how people are recruited, how they're measured, our culture of learning and inclusiveness and collaboration. And if you think, in my experience, in thinking about banking, most of the organisations I work with have very slow decision making, detailed policies. Most of the business cases are based on capital expenditure, take months to get through. Very difficult for banks in that way to be entrepreneurial, with a limited ability to fail or change your mind. And I think this is where the partnerships can be really powerful. I started in Google in July. I haven't been to the office. I feel like I'm fully immersed in the culture, and there are things that really stand out. You know, Google, I know, spends twice as much on recruiting people as the average company. And we have a very scientific approach to calibrating and ensuring people can adapt and deal with ambiguity. And there's a big focus, and we have a world for it. There's a big focus on how we treat each other, how we help each other. And it's all about encouraging innovation to flourish in a safe place. And I think, you know, to summarise, in terms of us rebooting banking, I think, you know, with the two factors of data and culture, the partnerships we're putting together, and Derek can certainly talk to this, but the partnerships we're putting together in the market with organisations such as Lloyds, HSBC, Deutsche Bank, it really is about the combination of the best of banking, you know, the 100, 200, 300-year heritage of putting a roof over people's heads and safeguarding their money, combined with the relevant principles of the Google culture that I've talked about, and the way we manage data and innovate at speed.
Yeah, I just wanted to pick up on your point about the partnerships that Google is making, because I mentioned that banks need to be cloud native, not just cloud based. And the Deutsche Bank partnership is one of the biggest announcements you've made. And when that came out, someone said to me, it's just another cloud computing contract. It's far more than that, Derek, isn't it?
It is, and you touched on this, Chris, as you talked about the evolution of the internet to the mobile to the cloud wave, and we're well into that cloud wave now. Many within the industry refer to it as the third wave of cloud, and that third wave is truly about business transformation, as you mentioned that. And if you look closely at the words used to describe in the press release the Deutsche Bank relationship, it's about the business transformation, and yes, we'll help with what we refer to as the below the glass. What the customer doesn't see, below the interaction level for the customer. We're helping to modernize, to connect the technology environments, the systems, and the data below the glass, all with the goal of unlocking the data to bring it back to the interaction level with the customer and true business innovation. And there are a lot of big ideas that are emerging out of that Deutsche Bank relationship and with other partnerships to where each of the partners, like a Deutsche Bank, can have access to the Google platform, the Google Cloud platform, can build themselves with their own engineers, leveraging the technologies that power the Google ecosystem, but then also partnering and getting early access to some of the products that Google is developing, and I can come on to some of those. And then the third is true co-innovation, developing new products and services that we bring to market that can be revenue generating products. The cloud isn't just about efficiency. It isn't just about infrastructure, storage, compute. It is about unlocking data to create new business ideas, new monetization models that ultimately have benefit for the business, but massive impact for the end user, the end human user. Now, we all know that, Chris, as you talked about, COVID has changed every industry. One of the top 3 requests of CTOs around the world in banking as COVID started to kick off and we moved people home to work from home was printers. Because it's not uncommon for a banker to print up to 1,000 pieces of paper a day, or it was pre-COVID. Now that's all changed. So one of the ways that we're helping customers is taking the capabilities of Google Photos AI capabilities, pointing that at paper, taking unstructured dead data in paper and in documents, and making it structured, decisionable data, and applying that to the likes of what Karen mentioned earlier as a 1-hour mortgage. Working and making those capabilities available to a Deutsche Bank to be able to transform their technology environment, as well as create new business solutions and opportunities that ultimately have the cultural impact that Karen touched on.
Yeah, no, I think what's interesting when we talk about cloud and cloud native versus cloud-based is the impact that has on the business model for the demand of digital transformation. Again, as I highlighted, and a lot of people talk about embedded finance. I talk about invisible finance, but I'm very interested to know when we talk about ecosystems and platforms and this new world of apps and APIs, how banks are going to compete in this space. Francesca, maybe you can give us a view around how this whole new world of platforms will allow banks to compete better.
Yeah, absolutely, Chris. So it's a very interesting topic. By the way, I would challenge Derek on the 1-hour mortgage to get to 15 minutes mortgage. I think it's closer than we all think.
Love it.
Yeah, challenge taken. Okay. So no, I think that's a very, very, very important question, one you asked, because I think my simple answer to how banks can compete in this new economy is one word, which is embrace it. So the reality is, I think we all need to not be in denial. I think the world has changed. The ecosystem in financial services has changed. And I think the first important thing is, adapt to the new normal rather than trying to resist with kind of existing legacy approach. So from my point of view, what that means, and I spent also, like Derek, many, many, many years in banking, so in a way I've seen a bit. I think the way it should work, for me, key pillars of embracing it and how to compete are probably 4, right? So one is acknowledge that a change has happened. We are moving from a bank-centric model to a modular banking model. And I think there is no doubt about this. So what I mean by that is that effectively it used to be, when I was young, that the current account was the heart of any financial services need. Today is not anymore. Today, the best experience wins. And I think I see with my kids, right? At the end, whenever they need to do something, they go on their mobile and they pick the service, whether it's payment, whether it is, they don't do lending yet, but they pick the best customer experience out there. So I think we're moving from, where you have your primary account to what is the best experience. And I think acknowledging this, even if you're in a bank, if you're in large banks, and acknowledging that this is going to happen anyway, is a really profound cultural change. And one thing I would like to note here, Chris, your comment before is there is a lot of lip service, if you want, that is put a lot of time, but in terms of digitalization, digital agenda being on top of, any banks that really CEO agenda. But in reality, you need to go deeper. It needs to be embedded in the company, in the way you work and so on. So I think first acknowledge it, embrace this new world, and realize that it's going to happen anyway. I think the second thing I would say in terms of how bank can compete related to that is, once you've done that, is build and believe in the network. So in a world where everything is modular, in a world where effectively the best experience wins, then I think not every innovation can come from within. So, and I think it's very, very important that the world of partnerships, as Karen, you mentioned also before, is super important, acknowledging that there is a world out there where people are great innovators in any specific areas, and you can build, you can innovate but through partnership, through being part of the ecosystem, through new revenue models, is the future, in my view. So, and I think more and more, I think banks can open their doors, can open and collaborate, not compete with fintechs, but effectively realize that they have different strengths, right? And it can be very, very complementary. Today, I would just say a couple other things that are also quite important is, at that point, play to your strengths, because I also see, sometimes there's a lot of discussions about, should banks compete with fintechs? Should they match the experience? I think we should all kind of play to our strengths like an individual. So the reality is banks have very big strengths. So at the end, you have a huge customer base, you have good access to liquidity, which should not be underestimated, is quite very important, but also you have a very safe and robust infrastructure. So I think these are strong strengths that, complemented with the innovation DNA and with the speed of execution of a fintech, are a recipe for success. The final thing, which I think is critical to get there, though, is to make sure you have some enablers in place. And this is where I think sometimes it's even more difficult than everything else. So enablers, foundational things like infrastructural things. So I think moving to the cloud, I think, is inevitable and is needed. Sometimes it's not easy. So I'm actually impressed by what Google has been able to do in terms of partnership and, bringing banks, more and more banks, to this new world. The world of API is the future. That's a second thing. Being able to operate based on a, flexible APIs infrastructure gives you access to data, gives you instant access to data. And you don't need to do a big technology project, big technology setup. You can just interface in a secure way with a lot of rich information and then elaborate it instantly. So APIs, moving to the cloud. And I would say then adopt and embrace a little bit more of an innovator culture that matters, okay? So it's about which people you bring in. So I think injecting a little bit of a new DNA, a shift in the culture gradually, that really helps. So I think in reality, I think this new world is full of opportunities for everybody, provided it's all kind of embraced in a way, and there is acknowledgement and desire to move and shift also in terms of business model, but also in terms of revenue models. Because my big belief is that banks will be operating a very different way in terms of revenue mix 10 years from now, if you do it. So as Derek was saying, today you could also, based on all the data and the way you use it, that you could come up with different ways to serve your customers, have nothing to do with intermediating loan and deposits. And this is the future, right? So we all know profitability is under pressure in banking with a traditional banking model. But there are a lot of other things that can be done that are asset light and actually can be even more exciting and much more profitable as well. So I'm an optimist all the time, and I think there are a lot of opportunities out there, but it does require a little bit embracing a bit the change ahead.
Francesca, are you seeing that? Are you seeing that shift in the market in terms of much more of a swing towards collaboration, banks and fintechs, rather than competing.
Yeah, Karen, I wish I could say yes right away. I don't think we are there yet. I do think compared to like even 5 years ago, there's a massive shift. I mean, there is much more collaboration and partnerships, but it's still difficult. It is still not where it should be. There are still, I think, what I see, an alignment of languages that needs to happen. So, I mean, when you talk about fintechs talking to banks, sometimes even the timeline they have in mind is completely different. Banks operate on a 1 year, 18 months type of cycle. For a more innovative company, 18 years is a lifetime, so you need to get things done quickly. There is a barrier, which I think is about compliance, unfortunately, which is about if you are a regulated financial services today, especially if you are a systemic financial company, right, like all the banks we mentioned before, you're affecting gold-plated rules in terms of compliance, which sometimes create a little bit of a barrier. So I think there's been significant steps that have been made in terms of collaboration and partnership in the last 5 years, probably. But I think we're just scratching the surface, and much more could be done. And it does require a little bit more of an open mind on both sides, to be fair, probably.
Yeah, I just wanted to pick up on some of the points you've raised, and equally some of the things we've been covering, because what's interesting for me when we talk about embedded finance is I call it invisible finance, because the bank and the transaction is no longer relevant to me as part of my life. It's like switching on electricity. It's just there, and you don't really care where it comes from. And I think in that context, it's very difficult for banks' brands and their ability to compete to be as prevalent as companies like Google, because I'm using Google every day and I'm searching every day. I'm using cloud and photos every day. I mean, the Google brand is in my life far more than the bank brand. So is Google going to go directly head-to-head with banks over time? And do banks become irrelevant when they're invisible? Florence, maybe you can give a view on that one.
Yeah, thanks, Chris. Yes, well, it's certainly not the first time we've had that question. And as someone who represents Google Pay, I always give the same response. So it's not really exciting. It's an emphatic no, though. I like to hear you say that you're aligned with that thinking. And it really boils down to, well, number one, I don't know how we would even go about becoming a bank. I don't think we've really got the skill set to do it. But number two, if you understand the mission of some of the activities we have in this space, so if you take the mission of Google Pay, it will go a long way to explain why we would never want to be a bank. And it's actually pretty simple. A lot of us have heard that very broad mission we have of organizing the world's information and making it useful. So we have a lot of people who search for things on Google, which is great. And a lot of those people want to transact. And for us, it's really rather simple. When someone wants to take that search to transact, we want to be helping them. So we want to make money simple. We want to make the payment simple. And the other day I had this exercise where I had to learn how to present with more emotion. So it's quite interesting. The trainer was saying you have to come up with something that's really striking. And I thought, what could it be? And I thought, you know what, let's calculate how much time in your life you spend trying to pay. And I actually jotted it down. I started calculating how long do I spend at the supermarket? How long do I spend trying to pay some sort of stupid transfer? And I calculated something shocking, actually. I convinced myself that the mission statement was really quite worthy. You can spend up to 1 to 2 years trying to pay. And so that's awful. We want to be improving that. And I guess that's one of the reasons why I think working at Google is so exciting. We can actually change that. But we can only change it if the whole ecosystem changes, which is what we've heard today a few times. So we really need everybody on board. If we want to try and enable payments, whether you're in the store or you're online or you're taking the bus, you need that ecosystem. You need all the banks to work with you. You need the network partners to work with you. You need all the online merchants, the payment processors to work with you. So our message is quite the contrary. The more, the better. right? And what's exciting here is we're just at the beginning of this journey, right? We can come up with so many more opportunities. So one of the big aha effects when we first launched Google Pay in the UK, we were really worried that people would still be using their contactless cards and that they wouldn't see the value of paying with a mobile. So we thought, let's do something. Let's work with our transit operators, so people like Transport for London. And by making little changes, by working with these partners, we were able to develop this seamless ability to take the tube just by tapping and paying and taking off. And that really resonated. People started getting used to paying with a mobile phone. They started seeing the value of that. They started paying for all sorts of things this way. And obviously with COVID, we've seen that be reinforced even more. Nobody wants to be sitting at the ticket machine, throwing in coins. So with that, we work with over 3,000 banks today. We're always about developing new feature sets. We see a huge variety in the banks that work with us. I sometimes get frustrated to see how some of the bigger banks or even the smaller ones just don't make the most of some of the features that we can propose. And then I'm delighted to see how some partners completely take our offering and transform it into a seamless and digital-only proposition. But whatever their mission, we hope that we can actually be changing the ecosystem, coming up with better solutions, and definitely not becoming a bank, but helping to improve our users' ability to deal with money and deal with their payments.
I'm loving this because I doubt many people realize that you work with so many banks, 3,000. That's pretty incredible. And in fact, Google's very strong in many countries, particularly in India, for example, where I know your Google Pay operations has been very successful, working with the banks, not competing with the banks.
Absolutely.
And I think what's interesting from my side is as we look forward, you know, I heard back in 30, 35 years ago, banks would be disintermediated by technology. It hasn't happened. And so in 10 or 20 years, what will banks be doing? Derek, can you give a view around how you see the future of banking from your perspective?
Yeah, you mentioned timeframes of 20 to 30 years ago, Chris. Interesting data point. We're almost 25 years from the date, July 6th, 1996, when the first financial services product was offered in an application on the internet.
For
the AOL Visa card generated 60,000 accounts on the first day, and we realized that, oh boy, this internet's a big thing for financial services. And we're almost 25 years from then. And yet today, contrast that, Chris, with the fact that in the United States of America, there are still a large percentage of financial institutions that do not allow you to open a checking account online today. It's just not possible. You have to physically walk into a branch. And so while we fast forward to the future, one imperative for financial services is the concept we refer to as DIY. It has to be DIY-able. You have to be able to do everything you want to be able to do in the glass if you want to interact in the glass. But you know what? The glass is starting to go away. So it's going to be hands-free. You talk about it being invisible. This is the same concept of how humans interact with computers. This thing's a computer, so that enables an experience for us. So human interaction with compute, human interaction with money will be done DIY-able, and increasingly it'll be done hands-free through voice. As you mentioned, Google offers some capabilities in that space. It will be increasingly purpose-driven. You've touched on that, Chris. And as we talk with CEOs, boards, and organizations around the world, it is a top priority. And it's great to see. And it's great to see how it's moving from thought leadership into regulatory oversight, but then also to innovation of new products and traceability, not of KYC, but of know your object, know your history of everything. And that from a purpose standpoint is incredibly important. The other piece is we look at the ecosystem, is the ecosystem can also only move as fast as its slowest part. And in the money ecosystem, the infrastructure of money at a market level and how money moves between institutions, between individuals, between organizations is really important. In the UK, very fortunate to have faster payments. But there are only, and depending on how you look at it, there are maybe 50 markets around the world that have real-time payments networks. In the very near future, money will catch up with the speed of the internet. And the ability to move money and transfer money at a infrastructure level in markets is a major area for many countries around the world, and providing the infrastructure that enables that is key. So increasingly, the future will be increasingly open, transparent, purpose-based. It'll be human-centered on the ability for each of us individually, regardless of our role and interaction with money, to be able to DIY or to be able to, for it to be invisible, for it to just happen. A use case that I like to talk about is driving down, when I lived in Madrid, Spain, driving down Calle Galgo, where I used to live, looking at a home, seeing that home in our car, speaking to my voice assistant in the car and saying, "Hey Google, how much is the home on Calle Galgo 28? How much would that be? Can I afford it? And when could I buy it?" And behind the scenes, the machine, the ecosystem, the internet is so connected in a way that my voice assistant comes back to me in my vehicle within a matter of seconds and tells me, "Derek, the home is available for sale. It's affordable. You can get your mortgage from XYZ company. It can be done in 15 minutes, thanks to Francesca's challenge. And it can all be embedded in the blockchain. And that can be real. I don't touch anyone. I don't talk to any human. I don't sign any piece of paper. But that's very, very real. The technology exists. As I described the candy store of Google, the technology exists to enable every bit of that. It's about connecting it at an ecosystem level, at an infrastructure level, bringing it back to the end human user experience. And we're moving there. But going back to the opening, the 25-year challenge, 25 years ago is when it started on the internet. It's still not available across the 6,000 plus financial institutions, even in the United States of America. So there's a lot of opportunity for us to help with the internet wave, the mobile wave, and the cloud wave to create the future of banking and human interaction with money.
Yeah, if we looked 25 years out, it'll be quantum and on Mars. Enough said. I'm wondering, Karen, are there any questions that are coming from the guys who are watching and listening?
Yeah. And I just have to say, Derek, I love you taking us back to 1996 and your internet example. And it just reminded me, Chris, of us doing all those conferences around Europe so many years ago, and the internet was just coming out, and we were at that time, 25 years ago, talking about how banks can get a single view of the customer and what should they do with the branch. So
I remember the first internet transaction where someone bought something was the Sting CD, which included Field of Dreams. So we are living in a field of dreams.
So, and you're right, we are getting some questions through. So one that's come through, I think first up is, what are traditional banks left with if Google takes over both infrastructure and customer interface, which is an interesting one. I think we've partly answered it, but what do you think, Derek?
If Google takes over the infrastructure and the end interface, well, again, as I mentioned, a good part of interaction and the interface is going to go away. So the financial institutions, a challenge for every financial institution, whether it's an insurance company, a cap markets company, a fintech or a consumer bank, is to look at what is the evolution of human interaction and customer interaction with their brand, with their products, their services, and how are they going to monetize that in the future. Google will increasingly, Francesca even touched on this, will increasingly move to public cloud just because of the scale, capacity, and the efficiency and the security associated with the cloud. It's going to happen. They will be organizations will become cloud native, and companies like Google will help make that happen. Traditional organizations will have the ability to continue a customer relationship to underwrite the risk associated with it. Karen touched a lot on that at the beginning, as well as to ensure the market infrastructure of money is done in a way that is safe and secure and regulated for customers. But one of the biggest challenges for financial institutions is understanding how that human interaction is changing, whether it's in the interface or the interface goes away. How do they maintain that relationship? There will always be a face-to-face relationship. But how that relationship changes, how risk is underwritten and managed, and then how it operates at a market level with regulatory oversight will be the key role of a bank in the future.
I'm asked that question in a slightly different way quite a lot around who in the future is going to own the customer relationship. But actually, there's another question come through. Is being as good as the next fintech enough in the future? I think Francesca and Chris, I'll come back to you both on that one.
Yeah, okay, let me step in here. I think that's an important question to think about. My general answer would be no, because the reality, the world keeps evolving. So if a bank now sets as a goalpost the benchmark of being as good as the best fintech out there, unfortunately, by the time it gets there, the world will move on and the bar keeps rising in a way. So from what I would suggest is actually, yes, it's good to look at what's out there and benchmark and continuously try to compete and improve, matching what other more innovative companies are doing and get there. But I think it's as fundamental as this to inject really in the core, so to kind of develop a culture of continuous innovation at the heart of your company, of your bank. So you do that only by reallocating, making sure you allocate the right resources in the right time and priority really to what will keep you, leading on the innovation side. So do you have good technology resources? Is this technology hard to what you do, and so on and so forth? So I think just kind of mirroring what's happening out there is never going to be enough, because it's going to be too late by the time you get there, from my point of view. But I think, Chris, if you have anything to add, I'm sure you have a clear view on this.
I have always got something to add, and I always have a view. So I think there's two parts to this question. One is, what's the real threat to banks? And the answer to that, in my view, is other banks. There's a lot of banks that are really awful with data. Banks will not disappear. They won't be disintermediated or disrupted. They will just acquire each other through organic and merger and acquisition growth over time. In the meantime, being smart banks, they will look at the fintechs and see how they're doing things. But if you look at almost all of the most successful fintechs, from Stripe to Adyen to Square, what they're actually doing is serving the parts of the markets that the banks don't serve well. Small businesses, the unbanked, the underbanked, the people who find difficulty making payments or difficulty getting their risk and credit scored. Those are the areas where fintechs succeed the most. So I say to fintechs, focus on the areas that banks don't serve or serve badly, but don't try and replace a bank, because you'll fail.
That's great. Thanks, Chris. And we have actually have we got time to do one more question? Because we've got, how can banks learn from banks in other countries? I think I'd direct that to Derek, based on your global experience.
Yeah, I'd welcome Florence's view here as well, given the 3,000 institutions that we work with on the payment side. That's one of the greatest benefits of working in a global company, is just the natural inbound learnings of differences from cultural standpoint, customer interaction, how the industries and the economies have been built over time. The role of central banks in each market is fantastic. There are great learnings from different parts of the world on where end user experience is headed based on some mature markets versus others. We can all learn, in the oft-cited example of the mobile money experience in Kenya with M-Pesa is highlighted as to how an economy can shift to where the where the dominant currency in the market now is not issued by the central bank, but it is mobile money minutes, and that then extends into the role of cryptocurrency and currencies that are not fiat, and the future of that impact. And learning from markets like a Kenya can be great. Learning from the Nordics is always highlighted, and perhaps an overused example of how end user experience can change from a digital standpoint. But there are brilliant case studies from China on ecosystems, the US on ecosystems, LATAM on ecosystem evolution. And it's incredibly important for organizations to look outside of just their own captive traditional customer base, and look outside of their geographic borders as well as outside of financial services to understand lessons and learnings for transformation.
That's great. Thanks, Derek. Chris, do you want? I think we're running out of time. It's such a great discussion. I mean, I've certainly enjoyed it. Is there any final thoughts you want to share with everyone?
I guess my final thought is that we've seen during our lifetimes massive transformation, more than generations before, but generations before lived through an industrial revolution, world wars, and pandemics. And so whatever you think we're going through, it's actually not that revolutionary. It's just the progress of humanity. I've got this vision that my kids will probably visit the moon for their holidays and maybe travel to Mars eventually, because they can. And Elon Musk is delivering on that vision. And Google's delivering on the vision that the world of connectivity and technology will just make humans better. And that's what we have to come back to, making humans better, society better, the planet better, and life on Earth and on Mars better.
I certainly echo that. And no, thanks so much to everyone on the panel. As I said, I think it was an amazing discussion. I hope everybody listening has enjoyed it, and very much look forward to continuing the debate. Thank you.